Fears of another interest rate rise have eased slightly after inflation accelerated for the first time in 18 months, but according to the markets, not by enough to force the RBA to hike again next week. New data found the annual rate of inflation jumped up from 3.6 to 3.8%. But CBA and Westpac in particular have pointed to signs of disinflation and deep spending cuts by consumers after annual underlying inflation dropped to 3.9%. That's the figure that the RBA likes the most. Some of the more optimistic banks believe the data could lead to an interest rate cut in November, but others, and most of them, are not that ambitious.
It's still high. At 3.9%, it is still very much on the up end. The idea of rate cuts anytime this year, I think, needs to be pushed well out because we are too far away from that. The thing is, the market is pricing, the market at the moment is suggesting that there is a near enough to 100% chance of a rate cut, the C word, by February next year. So that was the other outcome from yesterday's inflation data, which I find fascinating.
The reason that any potential rate cut this year would give the Albanese government a boost before any election is called. The Coalition, and I spoke to the Shadow Treasurer last hour, they beg to differ.
Treasury's got it completely wrong, and the Treasurer has got it completely wrong with 3 failed budgets, homegrown inflation that continues to rage, and Australians are all paying a high price for this government's complete failure to tame homegrown inflation.